Good day everyone, hope you are well. Today we are going to have a look at grade 8 exercise 7.1. Your instructions. Indicate the influence that each of the following transactions will have on the accounting equation. Use the table provided to record your answers. Right, so here's your table where we will record the answers. What I've done, I added T accounts in the attempt to explain it better to you guys. So hopefully you will understand it better after this exercise. Right, 7.1.1. Mr. Toy deposited 120,000 Rand into the bank account of the business. This was her capital contribution. The business issued her with receipt 001. Right, so the two accounts that we are going to work with will be bank and capital. When the owner puts money into the business, it is known as capital. Right, bank is classified as an asset, therefore the signs will be plus, minus, and capital are classified as owner's equity, and the signs will be minus, plus for capital. Right, my bank will increase with 120,000 Rand, and my capital will also increase with 120,000 Rand. Very important to remember now, bank will be my account being debited, capital will be my account being credited. Remember that for the accounting equation. Also remember that capital will always have a positive influence on owner's equity. Right, so your source document will be a duplicate receipt. Remember, you gave the original to the owner, so duplicate receipt. Okay, account being debited, remember we said it was the bank account. Bank is classified as an asset account, and therefore assets will increase with 120,000 Rand. Account being credited will be your capital account. And capital is classified as an owner's equity account, and owners will always have a positive influence on owner's equity, 120,000 Rand. Something that I always do to make it easier for me to understand, I write in the accounting equation formula. Assets will equal owner's equity plus liabilities. Then I test it afterwards. 120,000 Rand will equal 120,000 Rand plus 0. Therefore, this one is done correctly. Right, 7.1.2. The business bought equipment from Furniture City, 900 Rand, issued check 01. But the two accounts that we will work with will be bank and equipment. Right, let's go and do the T accounts. Remember, bank is classified as an asset, and therefore the signs will be plus, minus, and equipment will also be plus and minus. Right, my bank will decrease with that amount since I'm spending money. So my bank is decreasing, assets will decrease in the credit side, and my equipment, also an asset, will increase with that amount. Asset increases in the debit side. Let's go and fill that in. Right, just important to remember again, my bank is my account being credited and equipment is my account being debited, and both are classified as assets. Right, my source document will be a check counterfoil. I'm always doing bank first. Bank, then I know that's out of the way and I already have half of my marks. Bank is classified as an asset, and this part of my assets will decrease with an amount of 900 Rand. Why is my bank decreasing? Because I am purchasing equipment. And equipment is also classified as an asset, and assets increases in the debit side. So let's go and indicate this, plus 900. Let's test if I've done it correctly or not. Plus 900 minus 900 equals 0 plus 0. Therefore, this one is done correctly as well. Let's have a look at 7.1.3. Mr. Toy used a business check to pay for a personal insurance, 2,000 Rand. Personal is your keyword. Personal means it's non-business related, and it's money that the business is taking out of it's money that the owner is taking out of the business for personal use, and in that case it means it is drawings. Right, so bank is classified, the two accounts you're going to work with will be bank and drawings. Bank is classified as an asset and the signs is plus, minus, and drawings is classified as owner's equity and the signs for drawings is also plus, minus. And drawings will always have a negative influence on owner's equity. Right, so my bank will decrease with that amount, 2,000 Rand. It's been taken out of my business bank account. And my drawings will increase. The amount of money that the owner is taking out of the business is increasing with 2,000 Rand. And drawings will always have a negative influence on your owner's equity. Okay, so you can see here clearly, bank will be my account being credited and drawings will be my account being debited. Let's go and put that into my accounting equation. My source document was a check. So check counterfoil, my bank will decrease with that amount. So I'm doing bank first. Bank is classified as an asset and therefore my assets will decrease with that 2,000 Rand. Right, and why is my bank decreasing? Because the owner took money for personal use. Therefore drawings. Drawings is an owner's equity account and will always have a negative influence on my owner's equity. It is also very important that by definition capital will always be credited and drawings will always be debited. It's just by definition. Capital will have a positive influence on owner's equity, drawings will have a negative influence on owner's equity. It's the opposite. Let's test this. Minus 2,000 Rand will equal minus 2,000 Rand plus 0. We have done this one correctly. Let's have a look at 7.1.4. Rendered services according to the cash register rule, and therefore we receive 5,500 Rand. Let's go and put that into my T account. 7.1.4. My bank is classified as an asset, therefore the sign is plus minus, and current income is classified as income and the sign is minus plus. Okay, so my bank will increase with that amount, 5,500 Rand, and my current income classified as an income will also increase with 5,500 Rand. Current income is classified as an income and will always have a positive influence on your owner's equity. Bank will be my account being debited and current income will be my account being credited. Let's go and put that into my accounting equation. Right, so my source document will be a cash register roll. My bank is increasing since I'm receiving money. So bank is classified as an asset. Assets increases in the debit side. Therefore, let's indicate there's 5,500 Rand. Why is my bank increasing? Because I provided services, which will reflect in my current income account. Income is classified, or current income is classified as income. Income increases in the credit side, and income will always have a positive influence on my owner's equity. Something happened there. There we go. Right, so plus 5,500 equals 5,500 plus 0. We have done this one correctly as well. Let's have a look at 7.1.5. Miss De Toy paid Miss Viljoen her monthly earnings. Issued check 6,600 Rand. Let's go and put that into the T accounts. Alright, so 7.5. The two accounts that we are going to work with will be bank and salaries. Remember, they gave us the name of the employee and she said monthly earnings, and therefore we know it is salaries. It's a formal way of payment. We have the name of the person we're paying and therefore it's salaries and not wages. Wages is informal, they normally do not provide you with a name. Salaries is classified as an expense and the signs for expenses is plus minus. My bank of my business will decrease with that amount, 6,600 Rand, and therefore my bank will be my account credited and salaries will be my account debited. Right. Let's go and put this into my accounting equation, 7.1.5. Right, so my source document will be a check counterfoil. My bank is decreasing since I'm paying money. Bank is classified as an asset, and assets decrease in the credit side, therefore minus 6,600 Rand. Also, why is my bank decreasing? Because I am paying salaries. And as determined in the T account, salaries is my account being debited. And expenses will always have a negative influence on my owner's equity. Minus 6,600 equals minus 6,600 plus 0. Therefore, this one is done correctly as well. 7.1.6. Cash the check for petty cash. So petty cash is money that you keep in your business for when you need cash. So if you quickly want to go and buy some coffee and milk or some food for you and your employees, you just felt like eating something on a Friday afternoon, then you will take money out of your petty cash, give it to an employee, and your employee will quickly go to KFC and get some food. So that's the purpose of petty cash. Point being, we are taking money out of our bank account and putting it into the petty cash account. Right, so let's go and do the T accounts. The amount is 500 Rand. T accounts of 7.1.6. Bank is classified as an asset, plus minus petty cash is also classified as an asset, plus minus. There you go. Bank will decrease with that amount since I'm taking the money out of bank. Petty cash will increase with that amount since I'm putting the money into my petty cash account. Bank will be my account being credited, and petty cash will be my account being debited. Let's go and fill this into my accounting equation. Right, so they said cash to check, so my source document must be check counterfoil. My bank is decreasing, and bank is classified as an asset, therefore let's show the influence on my assets, minus 500 Rand. Also, petty cash is classified as an asset as well, and my petty cash is increasing. Petty cash, okay, so let's show the influence of that on my assets. Remember, petty cash is also an asset. So plus 500 minus 500 will equal 0 plus 0. I hope you understand the accounting equation. We're not done yet. Let's just quickly do the multiple choice questions at the bottom. Right, so instructions. Read each question carefully. I think that should state read. Read each question carefully and select the correct answer by writing the letter only A, B, C, or D next to the question number. Use the table provided to record your answers. Non-current liabilities include land and buildings and car loans? Nope. Rates and taxes and overdraft? Nope. Debtors control and overdraft? Nope. Home loan and car loan? Yes. So 7.2.1 will be D. There you go. Right, 7.2.2, repairs to equipment are classified as a non-current asset account? Nope. A current account? Nope. An owner's equity income account? Definitely not. An owner's equity expense account? Yes. 7.2.2 will also be D. Right, so let's go to the next one, 7.2.3. A service business generates income. Okay. A, by buying goods at a lower price and selling it for profit? Nope. By acquiring assets? Nope. Through services rendered? Yes. Therefore, 7.2.3 will be C. Okay, and then 7.2.4, every debit entry into an account results in another account being credited. This is known, let's go through this, balance the accounting equation and applies the double entry rule. Balance the accounting equation only, apply the double entry rule only. Therefore, C. 7.2.4, no, I'm not sure. Let's just quickly go through it again. Right, so balance owner's equity. Every debit entry into an account results in another account being credited. And applies the double entry rule. It should be a balance the accounting equation and applies the double entry rule. Therefore, 7.2.4 is A. 7.2.5, let's read. When a check is written out to Telkom to pay the business telephone account, bank will be credited, yes, and equipment will be debited, no. Bank will be credited, yes, and Telkom will be debited, no. Bank will be debited, no. Bank will be credited and telephone will be debited, yes. So 7.2.5 will be D. Right, I hope this was helpful. Have a great day.